painkiller, an anti-allergy and asthma drug. Okay, well, let's tell you what you'll get to see on Street Science today. First up, we have some market perspective, which is lined up with Ritu, Arora of Canara, HSBC, OBC, Life Insurance. We will be discussing the budget impact on the logistics sector with Sachin Banashali of Gateway Rail. We will also focus on the banking sector. Charles Goyal of UBS. He will join in with his view. As always, have with Krish Subramaniam of SFC Meta Investments, and T. Gyanashekhar will give us a check on the commodity space.
All right, time to welcome our market guest, Ritu Arora, Chief Investment Officer at Canara, HSBC, OBC Life Insurance, now joins in. Ritu, hi, good morning. What's your call on the market now?
Good morning.
We've seen the budget out of the way now. Global cues are looking quite okay. Do you think the markets are on course for making new highs? We're practically there, but can we build on from here?
The markets, like you said, are pretty much at the highs. But I think there are two very strong forces in the market. One is, of course, the positive momentum and the tailwind coming from improving macros. Macros haven't looked this good for a very long time now. The budget has given positive confidence to the market as well, a very well-balanced budget which has balanced the fiscal prudence as well as the growth agenda. But the reality, which is the headwind, also remains the corporate earnings. We've not had a great result season. Nifty revenues down, just growth of about 1.5%, and profits down by almost 6%. And markets trading at 20 times FI15, 18 times FI16 is doesn't give much headroom for the market to move from here. So I see the market in the near term being range bound between 57.50 and maybe another 300 points up and down is the range that I would see for Nifty. But in long term, definitely all this is building a momentum which should lead to markets giving double-digit returns over 3 and 5 years.
Okay. All right, Ritu, hi, good to see you in today. Wanted to start by asking you about a lot of these ideas within the broader markets which seem to be emerging now. Say, for example, a hotel, Leela, has also announced that maybe they look to sell off some of their key marquee properties in order to cut debt. Would you now start seeing more opportunity on a couple of these stocks which haven't really participated in the mid-cap run-up, maybe on account of fundamental changes?
A couple of sectors like tourism definitely will attract attention. Sectors like defense we've spoken about for a while and they have run up a fair bit. But tourism is a sector which came into focus with budget. The numbers are very encouraging. The players are very few and small. So the options are limited for investors. But definitely all tourism plays would be of interest but need a bottom-up analysis.
Okay, that point is taken. Let's talk about some individual sectors. Ritu, infrastructure and capital goods, cement, all these stocks had a big rally post-budget. What's your call here?
Rightly so. Rail, road, defense, clearly focus of the budget, and the trajectory has been set in terms of strategic roadmap ahead. Here, while these companies have a promising future, it does not reflect in their order books yet. And hence, I prefer to be in the large cap names after detailed analysis of the profitability of each company. None of them look very exciting at this stage, but I have overweight positions in large cap, capex and infra, and sectors aligned with these sectors.
Okay. Would you have a view on, private versus public sector banks, Ritu?
Have always preferred private sector bank over PSUs for the last couple of years, and the case only gets stronger. What is positive for PSUs is the Bank Board Bureau which has been announced, but it will be a while before we see the full functional Bank Board Bureau. But in the meanwhile, the fact that the capex for PSU banks has been cut to 8,000 crores and they will have to reach market for capitalization, we all know they are undercapitalized, and the fact that NPAs continue to stress, makes me prefer private sector banks, though they are expensive. But I think over next year and a half, they will continue to outperform PSU banks as they have.
Okay, what about auto names? We've seen quite a bit of correction in them post the sales number.
And clearly, volumes seem to be under pressure. I was watching on your own program a while back. So auto, I think, needs a little caution. We don't see volumes on tractors, two-wheelers playing out as expected. And I would be a little cautious of adding any more weight in autos.
Okay. Which sector gives you the most conviction from current levels and which sector doesn't?
I would prefer still IT sector. It gives me a lot of conviction because of the visibility on earnings that I can see there. It is definitely a sector well poised and will continue to give stable returns going forward. A sector which worries me now, which I was quite positive about, is automobiles. And I would want to evaluate a little more, wait for another quarter for numbers, but it definitely is a sector which was an overweight sector which requires a revaluation.
Okay. All right. Fair enough, Ritu. Any disclosures?
We are an institutional investor with long-term horizons, so we do have investments across that balanced large-cap portfolio.
All right, Ritu, we leave it on that note. Thanks very much for joining in and talking to us. So that's some fundamental perspective coming in on the markets. Time for a break now. But on the other side, we'll get discussing the budget impact on freight and logistics sector with Sachin Panachali, CEO of Gateway Rail Freight, and get talking on the company as well.